Welcome back. Gulf Oil Lubricants is the next company on our radar, and the company saw a good performance in the first quarter. EBITDA and profits saw a healthy growth, while operating margins also expanded. Ravi Chawla, MD and CEO, Gulf Oil Lubricants, is now with us. Mr. Chawla, great to have you on. I think your volumes were extremely robust in the quarter gone by, right? I think it was 2x the industry run rate. Just tell us, what are the projections? I mean, so far in the second quarter, are you still seeing that kind of volume growth, and what is the expectation for the year as a whole, FY25?
So the first quarter for us, April, May, June, of course, it comes at the back of a strong March quarter where all our year-end promotions and distributor schemes are on. So good quarter and good uptake in spite of the general elections and the heat waves. I think we have seen our B2C business doing well, particularly the motorcycle oils, the agriculture oils. All-around growth in the industrial segment. A few segments like infrastructure, I think, have been slightly low, and factory fill has been subdued because mainly we do commercial vehicle, OEMs. So I think overall a good quarter. As you rightly said, it's an all-time high in terms of all our numbers, revenues, profits. But as we look at this quarter, obviously the monsoons are where the consumption comes down. But for the year, the outlook is to grow 2 to 3x the industry, which we expect to grow at 3 to 4%. And we're on track to do that with all our initiatives.
So you'll grow 2 to 3 times the industry, which is growing at about 4 to 6%, you said, right?
No, industry growth, we generally take it in the range of 3 to 4 because we also do a lot of B2B and B2C. We are primarily in all segments. So we look at a 3 to 4% and we look at a 2 to 3x based on our market shares and our initiatives.
Okay, fair enough. Let's talk about the improvement that we've seen at the margin level as well. Your OPM levels are at about 13.1%. So just take us through whether this can also sustain, and what is the kind of margin profile you're hoping to close the year with, and also if there's any upward improvement in pricing.
Well, you see, you're absolutely right. It's a balance of the pricing, the competitive levels, and also what we do in terms of our mix. So we've been guiding a margin of 12 to 14%, and I think 13% is there. Obviously, backed by our segment-wise approach, there's a B2C segment, there are higher margin products. So value creation for us is to definitely go for more growth in these higher margin products and segments. So I think 12 to 14 is what we are targeting because we are also growing our market share. So, you have to maintain a balance between both. We could increase our margins, but then sacrifice the volume, market share growth. But we like to balance both, which is to take 2 to 3x the market growth rate in terms of volume. And the value part and the mix part comes in where we want to look at a 12 to 14% band. We'd obviously like it to be higher, but it all depends on the raw material scenario and the competitive pricing.
Okay, so all of this put together, now I'm looking for, some idea about the top line. You ended last year at close to, I think, 3,300 odd crores. Now, given the fact that you're looking at growing 2 to 3 times industry volumes and, the margin promise remains at 12 to 14%, overall top line growth, what should be the expectation for this year?
Yeah, I think currently you're seeing a 9% growth if you look at our revenue overall. And we definitely want to target, a double-digit growth in terms of revenue. And of course, certain segments, certain mix will play out in terms of what we want to initiate. So I think we definitely look for a double-digit revenue growth. And based on the current pricing levels, obviously pricing goes up, then all the pricing goes up. But right now it looks to be stable. So double-digit revenue growth and a 2 to 3x volume growth is what is our approach in terms of our business.
All right. Hi, Mr. Chawla. Good morning. Let me squeeze this one in on the battery business. I think it did around 80 crores in the past fiscal. Is it breaking even? And what is the target for this year?
Yeah, so happy to share that now we are getting, we haven't got there as yet, but the volume growth is there because we have now localized the toll manufacturing for it. But yes, it's a business which we hope to break even this year. And definitely it's in the right direction in terms of growth. Of course, as we look at the various markets, increasing our distribution, taking our distribution points up is the endeavor. So hopefully this year we should be able to get to break even.
Okay, all right, Mr. Chawla, we will leave it on that note. Thank you very much for joining in, and good luck to you and your teams for the rest of the year as well. Well, that's Gulf Oil Lubricants, good quarter and good projection for the year as well. Let's